Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Well, so far this week, we've seen the continuation of unprecedented manipulation in the trading of AMC. I'm not saying this because I'm down on my position and I have sour grapes. I'm saying this because the trading I see isn't trading at all. No, this isn't going long and going short. This isn't price discovery or a battle between buyers and sellers. Not even close. What I see are massive manipulative strategies and techniques being deployed by professionals and institutions that are solely and specifically designed to manipulate the price of the stock. And it's been going on for years now in plain view of regulators whom I believe are fully aware of it. What you see on your screen is the 30-minute chart of AMC, including after-hours sessions, which are shaded gray. I hope you can see the difference. Uncle Frank, why are you including your after-hours sessions in your analysis? Well, guys, if we're going to see after-hours trades over 50 cents away from the market, you see that little white arrow on the right? I guess I have no choice but to mention them. These trades happen all the time and have become known to the community as crime candles. This one was actually so vicious it traded below the new 52-week low we set only Tuesday of 652. Anyway, guys, AMC closed at 7:01 Wednesday, then it closed at 7, then it closed at 6.99. That's right. Someone just keeps adjusting the closing price down at one of my brokers. I've never seen anything like this shit in my life. I don't know if this is happening at your brokers, but I find it astonishing that the stock is so manipulated, the brokers can't even agree on a closing price for the session. We closed up 34 cents on the day, which was 5.11%, and after hours we added 3 cents to finish that session at 7:02. Now, based on that last price of $6.99, and I'm delighted we can finally all agree on one, you can expect support to the downside at key turning point levels of 669, 639, and 619. To the upside, expect resistance at points 720, 740, and 770. A lot of people have remarked to me, Uncle Frank, if they can manipulate this stock at will, why do you do any technical or fundamental analysis? Well, guys, I have to blame my dad for that habit, who taught me at an early age, just because everyone around you is acting like an asshole, there's no reason for you to join in. So I'm going to continue to do my work the way I was taught until the shorts on this trade are face down in the dirt and bleeding from every orifice. On topic, I couldn't help but notice the 30-minute chart may be showing a cup and handle formation, but I would be more excited if this chart pattern appeared on the daily or weekly, but still, something to watch for Friday and Monday. In this episode, one thing I'd like to discuss is the financial condition of AMC compared to some of its short sellers. A day doesn't go by where I'm not reminded about what a crushing debt load my little company has. So I wanted to turn the magnifying glass around and examine exactly how sick the people are that keep telling me I'm sick. As of mid-November, the top short sellers with over 1 million in put positions are Susquehanna, Nuttree, Hap Trading, EMG, Pentwater, Citadel, and Citigroup. Susquehanna leading the force at 7.4 million puts. Right now, I should mention Susquehanna also has 27.3 million calls, so they may be rotating bullish. Everyone on the list has negative shares percentage, so that may indicate they made a fortune selling calls and buying puts and are now unanimously unloading the puts. Wouldn't it be great if you and I could put on a trade with all our friends and then push the market in the direction we need it to go? Anyway, let's do a little comparing. Our revenue year over year is up 45.2%. I'm sure you listened in to the best third quarter we've ever had in our 103-year history. And yes, We have 4.66 billion in debt, right? But let's talk about Citigroup. That's our own investment banker that has a sell recommendation on us. They've got 1.1 million puts. Their revenue is up 9% year over year, but they have unrealized losses of $46.2 billion. That's up 312 million. They have securities sold yet not purchased of 109 billion. Right? Let's talk about Goldman Sachs, the people that spoof the shit out of us every day. Their put position is down to only 105,000, but their revenue is down 1% year over year. That shows a 36% decline in net income, due mostly to an $864 million write-down. That was Green Sky FinTech and other real estate investments. Securities sold yet not purchased for Goldman, $115.4 billion. And what about our old friend Kenny over at Citadel? He's got over 1.5 million puts. His revenue's down 35% as of the first half of 2023. Securities sold yet not purchased as of March, 45.7 billion. Yeah, I don't believe you, Kenny. The point I'm trying to make is the people that are shorting us are in far worse financial condition than AMC, in my opinion. Let's continue our comparison of AMC's performance against the short sellers of AMC. That bar chart on the top, that's trailing 12 months revenue going back to 2013. Obviously, heading in the right direction. Right? Recent headline. Jim Chano says this is a golden age of fraud with plentiful short opportunities as he converts fund. Now, what he's talking about is fraud in the companies that he's shorting. But the ironic thing is we think it's fraud, what you do is fraud, Jim. Short seller Jim Chano says he has a bet against meme stock favorite AMC. I never forgot that. That goes back to 2021. Another headline could be Jim Chanos is converting his hedge fund into a family office now that he's lost all his clients' money. I hope you apes remember, this is the guy that dreamed up the ARB trade on AMC. Remember? He said, oh yeah, I'm short the common, but buy ape, the pounce. And I think Froggy, Boss, Little Bigums, others, they swallowed that BS enthusiastically. The lesson here, you never believe what your enemy tells you. This guy has gone from 6 billion in 2008 to only 200 million today. He still has to return his investors' money by year end. So there may not be much money for Jim here, to manage. This is, he's down 4% year to date. This is a year where the S&P did 18% over the same time window. This is a guy that Gasparino supported tirelessly. Okay? Just remember, people, what goes around comes around. Guys, the headlines that Uncle Frank prays for are beginning to trickle in from Hedge Week, Swiss boutique Green Ash to close Chanos long-short equity fund. Now, this article comes from the perspective of people who invested in the fund. Zurich-based investment boutique Green Ash Partners is to close the Chanos Equity Long Short Fund, a UCITS fund it launched with famed short seller in October of 2022. Guys, it made it 1 year, according to a report by CityWire. The decision comes after Chanos announced earlier this week that he is shuttering the main hedge funds at his New York-based firm, Chanos & Company, as he believes the long-short investment model is no longer viable. Then another, Samson Rock liquidates, there's that word, trades run by departing co-founder. London-based, event-driven hedge fund, Samson Rock Capital, is winding down a part of its $800 million-plus portfolio run by co-founder Satpreet Bar, who is leaving the business according to a report by Bloomberg. The report cites an investor letter seen by Bloomberg as revealing that the firm is liquidating all of its index rebalancing trades that made money by betting on stocks entering or exiting major indexes. And here's some great news from Benzinga. Short seller hedge funds rack up $43 billion loss in recent market rally. Didn't I tell you guys the surprise rally, especially ones that catch them short and defy logic, are friends of ours. Those are white swans. The recent equity market rally, which has launched the S&P 500 on course for its best month since July of 2022, squeezed hedge fund short sellers to the tune of $43 billion. Data collected by S3 Partners showed that hedge fund short selling losses between Tuesday and Friday last week, following better than expected U.S. inflation data, amounted to $43.2 billion. The data did not take into account gains hedge funds might have made from other stock positioning, but nevertheless, we want those surprise rallies for now. Now, I saved the best comparison for last. One of our most notorious short sellers of AMC is our own chief investment banker, Citi. These guys planned the ape, the pounce, hashtag today we pounce, right in our very own boardroom with Adam and Phil from Morgan Stanley. These guys engineered all the things you Adam fanboys seem to love, like the reverse split, the conversion, all of it. These are the guys that can't go 1 week without reiterating a sell recommendation or strategically released price target cut on our stock. Well, you may have heard they've been laying off some people, and I'm not talking about tellers. Headline: Citigroup initiates layoffs impacting over 300 senior managers. The restructuring is designed to simplify Citigroup's complex management hierarchy, which has historically led to delays in responding quickly to market changes and meeting customer needs. Yeah, you guys are losing money elsewhere and you're cutting staff. That's how I read that. According to investing.com, this action affects approximately 10% of the company's senior management and is a step in a larger strategy to simplify the management structure and speed up decision making at the firm. But for you senior managers that got canned right before the holidays, I've got a great idea just for you. And here it is. Maybe it's time you senior managers from Citi blow the whistle on that dirtbag bank. Look at these headlines. SEC awards more than $104 million to 7 whistleblowers. And another from May. SEC issues largest ever whistleblower award. The SEC today announced the largest ever award, nearly $279 million, to a whistleblower whose information and assistance led to the successful enforcement of SEC and related actions. This is the highest award in the SEC's whistleblower program's history, more than doubling the $114 million award the SEC issued in October of 2020. Guys, this is a no-brainer. Let's turn that frown upside down and get a big fat check for the holidays. And speaking of whistleblowers, the number one whistleblower on Wall Street right now are the hedge funds themselves. The short sellers help lead surge in SEC whistleblower tips. Do you guys realize that the short sellers are reporting the companies that they're short to the SEC for infractions that they believe will get them a 30% commission on whatever fine the SEC hands out? Okay, so in addition to making money, I mean, obviously, if the SEC investigates a company, that stock might drop. So it's helping them get out of their positions, but they'll also get like 30% of whatever the SEC finds. If that doesn't spell desperation, I don't know what does. I want to wish all of my subscribers a happy Thanksgiving, and for those of you that have an AMC theater near you, I hope you go out and support our business over this holiday weekend. According to Box Office Pro, 5-day weekend box office forecast: Napoleon and Wish aim to bring out Thanksgiving moviegoers. For Napoleon, the 5-day opening weekend range looks like 23 to 34 million. For Disney's Wish, looks like it's 49 to 66 million. Current projection ranges call for a 33% increase from the comparable weekend's top 10 aggregate of 89.7 million in 2022 and a 37% decrease from 2019's $190.2 million frame. So guys, we need to get out there and support our theaters. It's important to me you guys understand that this is not a hype channel or a source for hopium. I've never told anyone to buy, sell, or hold AMC or any security for that matter. I started this channel because of all the hit pieces in the financial press against AMC, but mostly because they never want to talk about what we want to talk about. Things like naked short selling, a pile of FTDs higher than Mount Everest, the misuse of dark pools, synthetic shares, spoofing and layering, the offshore shorting of AMC, using tokenized AMC as locates, and the list goes on and on. I can't give investment advice, but I can tell you to stop posting that you plan to sell as soon as you get even. That's your business. They are listening, and you should never tell your enemy what your plans are. It's just not payment for order flow we have to worry about, but payment for data flow. Every brokerage firm that sells their flow to our enemies also lets them know the exact average cost of its customer base. That's right. In my opinion, Kenny knows the average cost of all the investors at Robinhood, Webull, every broker that you could name. If you've made it this far in this trade, you deserve to be congratulated. Okay, take a look at that meme on the screen. All right, there are a dozen hedge funds, some of them as old as 167 years, that no longer exist. You were a part of that. Don't ever forget it. Now, guys, I've showed you this chart before, but take a close look at it again. Prime book, cumulative U.S. short flow, positive value equals shorts increasing. Okay, this is hedge fund, U.S. single stock short flows increasing for a record 14 consecutive weeks, according to Goldman Sachs. A record 14 consecutive weeks. I want you to know, in my opinion, AMC is in a far better position right now than our enemies by a country mile. We are not leveraged 40 to 1. We are not facing pushback from regulators, the government, foreign governments about our extreme leverage levels. We don't have to face the responsibility of billions of synthetic shares out there if they exist. We don't have unrealized losses to worry about, and we don't have billions in securities sold yet not purchased. Right? Now, I've told you we have to keep an eye on our enemies right now, and I've got another one for you. And from Hedge Week, hedge funds exit tech stocks as S&P 500 valuations hit a 2-month high. Global hedge funds exited both long and short bets on technology stocks at the fastest weekly pace seen in 7 months last week, according to a report by Reuters citing data from Goldman Sachs Prime Brokerage Division. Between Friday, November 10th, and Thursday, November 16th, traders cut their long and short positions on semiconductor makers and communications equipment providers, while also exiting long positions on software companies. The sell-off came just as the S&P 500 stock valuations climbed to a 2-month high, well above a long-term average. What does that tell you? They're coming out of tech, guys. They're coming out of their tech positions, both long and short, but all long on the software side. So we've got to keep an eye on the hedgies right now. Do you guys remember the original narrative, the original bet on this play? They told us AMC is going bankrupt. We said no. We were right. We didn't get paid. Then they changed the bet. AMC's never going to post a profit again. They were wrong. We were right. We didn't get paid. Then they changed the bet yet again. You'll never do better than 2019 pre-pandemic. Well, guess what? We just had our best third quarter in the company's 103-year history, and that includes 2019. But I've got more good news for you. We just passed 500 releases for the year. We haven't done that since 2019. Our average capture per release is 15.8 million. In 2019, it was only 12.4 million. You'd have to go back to 2010 to find a higher average capture per release than we have right now. The writer's strike is over. The actor's strike is over. COVID so far has been pretty quiet. All we need is more product from Hollywood to blow the roof off these numbers. I hope you guys are still with me because I don't want you to miss the most important slide of all from November 15th, Zero Hedge. Russell 2000 call volumes explode to all-time high in short crushing ripfest. Realizing they are far too short the Russell to cover cash single names and go long, hedge funds did the next best thing they could, bought a shitload of IWM calls and then bought even more calls. Guys, break that sentence down. They're too short to cover. They can't cover all the single names that they're short. So the only thing they could do was buy calls. What does that tell you? Guys, it's only 8 days until Beyonce drops, and here's hoping we start getting good news headlines right before the movie is released. When trading resumes on Friday, we'll see flash U.S. services and manufacturing PMI. That's Black Friday. Both the stock market and the bond market will close at 1 p.m. Eastern Time. Monday, the 27th at 10 a.m., new home sales. Tuesday, the 28th, 9 a.m., Case-Shiller Home Price Index. Then at 10, Consumer Confidence. Wednesday, the 29th, 8:30 a.m., GDP and Advanced Retail and Wholesale Inventories. Then there's Thursday, the 30th. This is a big day. I'm hoping we start getting headlines on Thursday, the 30th about selling out theaters. Also, it is a minefield for the hedge funds. 8:30 a.m., initial jobless claims. Personal income and spending, PCE Core Index Data Group, the whole thing. And then at 10, pending home sales. And then, of course, Friday, December 1st, we're going to get Beyonce and Godzilla -1. Hope to see you there at the bell. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.